Hello, and welcome to the Banker's Tech Talk video series, now in its 5th year of tracking fintech developments. You can see all the episodes on thebanker.com/techtalks. I'm Joy Macknight, Managing Editor at The Banker, and my guest this week is Matthew Addison, CEO and co-founder of StepLadder, a peer-to-peer startup bringing innovation to the mortgage sector. Matthew, thanks so much for joining me today.
It's a pleasure to be here, Joy. Thanks very much for having me.
So can you explain a little bit about the concept of collaborative finance?
It's naturally social money. The idea is that it's actually all around us already, whether it's in the building societies, which are thriving here in the UK, to mutuals, which we know are a big part of the insurance sector overall. So collaborative finance finds a place really at the other end of the spectrum from something much more transactional, payment systems, getting the best exchange rate when you're traveling. At the other end of the spectrum, when you're thinking about, especially in context of personal finance, going on a long journey, this is essentially a way to be able to go on that journey rather than alone with a support group around you.
Okay, so how does StepLadder sort of leverage that concept in order to help people get on the property ladder?
The idea is that we facilitate matching people to a group who all have the same goal. They put money aside at the same regular pace for the entire length of their commitment period, but each month, rather than the money sitting in a bank earning not interest, that money is pooled and allocated to one member as a random draw. That random draw becomes the lump sum that they can then utilize towards their stated goal. In this case, being able to put down a down payment or part of a down payment towards their home. But we do, a lot like a university would, a lot of the selection, screening, and control process. We administer the fund so it doesn't disappear. We make sure that we have the right infrastructure, the right risk controls, the right provisioning, and we make sure that for the individual members, they have to just be worried about making their individual commitment, and the rest of the trouble sits with us.
Okay, but what is the business model of StepLadder?
That's a great question. So the core economics of StepLadder are essentially to provide members a service for the entire length of their journey. And that basically starts with the initial commitment that they make to StepLadder circles by putting money away regularly, month after month. And for that, we charge a small fee that allows us to recoup the cost of delivering that service and providing that infrastructure. From there, we also provide them in the Groupon style way of discounts on things that they transact with infrequently. A great example of that is conveyancing solicitor. What is the right price to pay for a lawyer for buying your first home? It's a really opaque market that's really fragmented. If we can provide essentially group buying discounts for things that you do infrequently as a group to that circle, then there's obviously economics that they get to enjoy and that we make a little bit as a referral fee. And you're never tied to using anyone we introduce. The last piece, and probably the most important, is you think about the mortgage itself, where essentially there's massive information asymmetry, a real lemons problem with a first-time buyer who's taking out their biggest loan that they've ever, biggest financial transaction of their lives probably at that point. And lenders have a lot of risk in that, and in a market like the UK, where 7 out of 8 first-time buyers uses a mortgage broker who only knows them for a couple of weeks and makes a commission at the point of transaction, there's a lot of information asymmetry. And there's a really motivated participant in the middle of that transaction. If we can step out of that and say we've gotten to know this person for months or years before the point where they're ready to buy, we can also help that individual member navigate who the right lender could be for their individual circumstance. If they're a contractor, a sole trader, an entrepreneur. I mean, I even have some of the venture capitalists that we've talked to come to me and ask for some help in figuring out what the right mortgage is because they have money tied up in the carry of their fund. The question is that mortgage process is one that is naturally fragmented, and we can help our members by being on their side navigate that whole process. And one of the reasons we're able to do that is we've gotten to know them so much earlier.
Okay, and my last question is around the fact that you've been chosen to join the London venture studio of BBVA and Anthemis. You know, what do you hope to get out of that?
Gosh, I mean, they are fantastic partners across the board. We have a top-tier fintech-focused VC, and the team especially that's working with us is actively involved. I mean, I don't think 3 or 4 days go by when I don't touch base with the team there, and a lot of their insights, whether it's thinking algorithmically about how we match people to groups across more dimensions than just creditworthiness, which is the next level of what we're trying to do as we start hitting some really attractive points of scale, all the way through to some very tactical things like who the right counterparties are for some of our transactional business. The key thing is we have a great fintech VC, and that's married to a great strategic partner. If I were to think about our global plans for StepLadder as a business, I couldn't imagine a better partner than BBVA in terms of where their footprint is and in terms of how well they understand our model. Because again, one of the things that I find fascinating is that while our StepLadder model is relatively new again here in the UK, especially in digital format, when we start talking about other markets we can go into, many places as much as 40% of the population already knows it.
Well, thank you so much for your insights, Matthew.
It's been a pleasure to be here, Joy, and thank you so much. See you again soon.